FOS Swing Day Trading. It's April 1st, 2021. The market is still open prior to the shutdown for the holidays, for Good Friday, Easter Monday, Easter Sunday, I guess. This market will be open again on Tuesday. And I'm pretty much done trading for the day. I made a lot of scalp trades today, and kind of called it quits a little bit early, as the market seems a little indecisive in the final hour of trading. I just made a scalp trade, and that about does it for me today. The markets were strong at the open. And you can see the NASDAQ was a little powerhouse. At 9:30 Eastern time, the market opened. I'm on the wrong day. Okay, here we go. 9:30. All right, so 8:30. 8:30 Chicago time, market open, or 9:30 Eastern time. And we got a nice little lift off. And I had positioned myself prior to the open. I bought 10 shares of the NASDAQ micro E-mini contracts. And I turned around and sold them for a quick scalp trade. I bought it 13,205.25, then sold it 13,206.50. Now that trade affected me later on because I made another mistake, and these are mistakes you need to avoid. I didn't dial my number of shares down to one contract, and I was trading in the S&P futures, and then I noticed that I hadn't been watching the NASDAQ chart for a while, and I looked over at the NASDAQ chart, and I noticed that we had breached the line that I had drawn back in February. And that line came up again. the blue horizontal line that you see. So I'm referring to this blue line. This blue line is a line I drew almost a month ago, and over a month ago, and it keeps coming back, and we breached that line, and it looked like we've breached it several times now, and the market seems so strong. The tech stock seems so strong today that I thought this was going to be a true breakout. So but I like I said, I'm long the Qs in my retirement plan, so I wasn't planning on a big position in the micro E-mini NASDAQ. and I thought I was just buying one contract. And when I clicked the buy button, I quickly realized that, wow, I just bought 10 contracts. So then my goal was just to get out of those contracts with a profit. So I bought here, and I think I was selling one at a time. So I sold a couple of them, getting just minimal profits. And I sold three more at higher profits. But then this candle went down, and I didn't want to get stuck with even 5 contracts. So I sold 2 more contracts at a little loss, and then I missed an opportunity to get out of the rest of the contracts, and I eventually got out of them. I think I may have made a tiny profit, or maybe taken a small loss on that trade. I did some more, did a few more scalp trades, but I made sure I was only purchasing 1 or 2 contracts at a time. I spent the majority of my day trading the S&P 500 with scalp trades, and this again is the mini S&P 500, not the micro, but the mini. And this is the 1-minute chart. That's why it's moving so it seems to have much more significant moves. But these are 1-minute moves, so the moves appear more dramatic. This is the 15-minute chart, so you can see it. It gives you a whole different perspective of what's going on with the S&P 500. So let's go back to the opening. At 8:30, I had actually pre-market. You can see that I made a purchase here, right there at $3,984.50. And at the opening, we had a open higher, which I was expecting, and I wanted to take advantage of that. And on the opening candle, I sold that contract at 3987.75. Then we gyrated, then we forged higher, and we just continued higher after that. I missed out on a lot of this. I think I was fooling around in the oil patch at some point. In fact, I was. But as we started getting some pullbacks, then I saw some opportunities to scalp trade the S&P 500 again, and I would wait for just a series of red candles. Got a series here, and we touched on the 200-day moving average, and this is what you see a lot of times. You get a little touch the 200-day moving average is usually a significant spot, so you get a bounce off that and rally high. So that would have been a good opportunity for a scalp trade. But a lot of times, that 200-day moving average is used to fake you out as well. So it'll touch there and look like it's moving higher. Then you jump in thinking you're going to get a reversal, and then it'll just penetrate the 200-day moving average, and then trade down like it did here. Like it went up, then it came right down and kind of cut through it, and then all of a sudden the 200-day was resistant. So I'm a little leery sometimes when you get a big descent like this to buy right at the or above the 200-day moving average, because then it could end up being resistance, and then you may not, get back to your price for a while. But the second time when we penetrated the 200-day moving average and got this big red candle down, I looked at, and then it was followed by this one coming down, and I looked at that as an opportunity to get a scalp trade, because we had two big descents down here and here, and this one, went through the 200-day moving average, and I figured we would probably bounce back to the 200-day moving average. So that's when I went ahead and bought this contract at $399.50, and then we were moving back to the 200-day moving average, but I wasn't going to chance it. I wanted to be a little conservative today, because I won't be trading again until Tuesday, so I didn't want to go into the long weekend with a losing day, and so I just did the conservative thing when I got a reasonable rise higher, which was pretty good. I mean, it went from 3999.5 to 4,000.5. So it went up a full point. So then we went through the 200-day moving average, and now it's acting like resistance. We came back down, we went back up, penetrated the 200 and the 50-day moving average. You had the 50-day cross over the 200-day. We went back down, got that crossover, and now we're moving back towards there. And I wouldn't be surprised if that's kind of where we end the day. We're only 15 minutes prior to the close, and we're right at where the 50 and 200-day moving average are crossing. Look, we're right there. Right there. Okay. So that was my trade in the S&P 500. In the oil patch, that's where I had a little bit of fun today. Let me see if I can get something moving here. Okay. All right. Now this is 1 minute chart. 1 minute charts always confuse me time-wise, because they're so different from the 15-minute charts. So you can see there was a lot of activity right here. I think this is where I started. Let me see. Let me go back a little further, see if I made some trades before then. No, it looks like that's, well, right here. Okay. All right, so this is where my fun began. This was actually in the pre-market. Now, I haven't spoken correctly on my prior videos about crude oil. My crude oil chart is in it's a crude oil. It's the NYMEX NYMEX exchange that trades my crude oil. So that's at least that's the chart that I'm using, and so that's New York time. So that's why the time is East Coast on the oil charts, and not Chicago. With the indices, with the equities, with the Nasdaq, Dow, and S&P 500. Uh, I'm trading those out of the CME exchange, which is a Chicago mercantile exchange. So that's why it's in Chicago time. So this is New York time. So this was pre-market for the stock market anyway, and we had a significant decline in oil pre-market, and I thought I could get a quick scalp. Of course, I purchased here, and we just tanked. I bought another one here, and we continued to just tank. And so I bought a third contract here, and those three contracts gave me the biggest headache because these are not like I tell you every time I talk about them. These are not micro contracts in oil that I'm trading, and you can lose money quickly in oil. Oil can move quickly against you. I think on this candle that followed my third contract, I was down about $2,000. I mean, good thing was I had built my account up to 48,000, but I was seeing 46,000, 45,000 on my account. I had really dipped down, and oil can crash like no other commodity. I don't know if you all remember about a year ago at this time, oil, there was, I can't remember the exact month, but it was either April or May. I don't remember exactly when it was, but oil had fallen off the, it fell so low in the front month that it was, you would have to pay to get out of your contract. You would have to pay. It was like, like right now it's trading at $59 or $60 a barrel. That front month contract had gone into the negative. In other words, you would have to pay storage fee for the oil just for owning the contract. So you couldn't just sell your contract and get paid for it. You sell your contract and you still owed money for storage fees. I was crazy. I even traded in that, but they were very quick scalp trades, and that was dangerous territory. And that was the lowest I've ever seen oil go. That was when Russia and the cartel were going at it. The Arabs and the Russians, and they were, I guess, just undercutting each other with the price of oil. And the bottom of oil just fell out. That was an interesting time. But so I'm aware of how quickly and how drastically oil can move against me. So I really focus when I trade oil, and I know there's a potential for a big loss, and I don't put in stops, but I know mentally that at some point, you got to get out of the trade if it goes badly, and you don't want to lose, uh, five figures from a scalp, from what was intended to be a scalp trade in oil. But I was really focused and thinking more of how oil has been trading more recently. Oil's been on an upward trend rather than downward, and part of the inflation fear has been the price of oil going up. And I just can't imagine. Well, I can, but I just didn't imagine all that happening just today. That all of a sudden oil price is going to reverse directions and tank and the bottom fall out. It could happen, but I thought it was unlikely for that to happen. So I thought that I could, just kind of wait for how it's traded of recent. And of recent, I'm watching this stuff every day. So I'm very familiar with oil trading patterns. And what I've observed is that oil will tank like crazy, like it did here. And then you get this little plateau. You get um, um, you get a channel going. Um, and then you're going to get a change in direction. And that change in direction with oil, unlike some of the indices, which may go down and stay down for the count, and then maybe a couple of days later go back up, or like the small caps, they can go down and just keep going down for a while, and then they blip back up for a little while and come back down. Oil has dramatic moves to the upside, and it's been doing this almost daily. It's been going down, and then it has a dramatic move to the upside, and it won't stay up long, and it'll go back down. But I think I have more fear of shorting oil than being long oil. So I don't short it. I have shorted, but for very brief periods of time. So 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 what really encouraged me though was the candle that followed my purchase of this third contract. After I bought this contract, got a big downdraft, and then of course, that's when my account was looking a little shady, down about $3,000. And I'm thinking, wow, three contracts did that. I gotta really be careful when I trade oil. Um, and then I saw this wick form, this big wick. I said, oh man, this is forming into a hammer. And this is the pattern that it's been showing. You get that big reversal pattern. And so got that hammer, and then we got a green candle followed by a larger green candle. I said, this is really the pattern I need. This is what I'm looking for. And I was hoping it would happen quickly, but of course it didn't. And I had to kind of sweat it out, but I was pretty confident. And even when it went back down, I said, this is too classic looking for this for a trend higher to not occur. And I said, I'm not the only one out here trading oil, so they don't have something against me. I mean, the pattern has been form a bottom, and you get a little channel, and then you get a breakout with a pretty um, significant ride higher, and that's all I needed because I bought that third contract here. So I just needed to get above there, and so we went back down. I still wasn't concerned. We got this green arrow up, then I was getting more confident. We went down again, and then I got a little concerned after the second one because, this didn't look good. But then when I saw this start peaking up, this green candle start peaking up, then I was very confident. And that candle just went up to there. And that looked so strong right there. I said, hey, we're going to get some upside here. But I didn't want to take any chances. And as soon as the price got a little bit above the third contract, where I could make a profit, at least on that contract, I got out of that one. So I bought that third contract at $59.47 and sold this contract at $59.53. So that way I only had two contracts. So I made a little profit on that one. And then it was just the two contracts that I had. and I could hold two contracts for a while because even though that would take a toll on my account if oil tanked, it was a lot easier to weather two contracts than three. And so then we just stayed in this channel for a long time, and we trended down, a little bit discouraging, but I was thinking if the patterns stay true, it's going to happen. It's going to happen. So I just stuck with it, and we finally started breaking out. Now we started breaking out here, and we got this big candle up here. Now, why did I sell that second contract here? Okay, that was at a lower price than what I purchased it. I purchased that second one way up here at $59.94, and I sold that second one at $59.53. So I took a loss on that one. I'm not $59.53, but here it is, $59.62. So I took a loss on that one, but I figured if the pattern's gonna stay true, then I'll make up ground with that one contract remaining if we get the big shoot up higher. On the other hand, if it doesn't and we tank, it'd be better for me to let my account tank with just one contract. So I just held on to that last contract, and we went down, we got a little up, we went down again, we're getting lower highs, a little bit discouraging. And then we had, some dojis. And then we got this green candle here. We were a little bit higher. That was encouraging, followed by another green candle. Then I knew it was off to the races. Then boom, 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 boom. And I sold that third contract at 60.18. Now, that was higher than the price of the the first contract I bought at 60.110. I'm 60.10, and I sold it at 60.18. So 60.18. So that was for a profit. So overall, the trade actually lost a little bit of money, but I had done some scalp tradings in the S&P prior to this, or I guess kind of during this. And so that made up the difference. So I was still, after all was said and done, I was up about $41. And so that was it for the trades that I made in the oil patch. Maybe it wasn't. Okay, I did some more trading. I forgot about this. Yeah, I just kind of went wild on oil here. Now this was a little later in the day. This was at 10:30. Then oil was sitting way up high, and it just started tanking again. And it tanked, and it went through the 200-day moving average, and got the candle down. And so I decided to make some quick scalp trades, and I bought at $59.77, sold at 59.79. And we immediately went down after I made that sale. And with the big candle down, I bought again at 59.47 and sold at 59. Sold at 59.79. No. 59.48. So it was just for 1 point, for 1 cent. And then, I just did more choppy trades like that throughout this whole descent. Every time it would go down, I would buy and sell almost immediately. So every one of those trades was profitable, and I guess that was my way of getting back to what oil had done to me earlier. I felt like I had control of oil. And of course, when it was all said and done, oil took off and kind of laughed at me, just went way up high without me in it, of course. And then I was done. I was done with oil for the day. So after all those little chop trades and all the little trades I made in the NASDAQ, I ended with the all-time high on my account, $49,250. And I have absolutely no positions open, so I can relax during the holidays. And remember, this account has been as low as less than 30,000 since mid-February. We're now at 49,250. We're off to the races.